Hey everyone, my name is Shubham and you're watching ATS. And in today's video, I'm gonna tell you how to use premium calculator provided by ATS. Let's get started. So, option calculator, or better say option fair value calculator, is used to calculate the fair value of the option. The entire idea of calculating fair value is to know whether the option is overpriced or it is underpriced. If the market value is above its fair value, you can sell that option and eventually the market value will come down. Or if the fair value is more than its market value, you can purchase that option and market value will eventually correct itself and comes up. In our option value calculator, we are not just going to calculate fair value of the option. We are also going to calculate option Greeks like delta, gamma, vega, theta, rho. Now, let's just straight jump into how to use this option calculator and what are the inputs required. So, whenever you're ready, just go to Aditya trading.in. Here, click on this option. Go to margin calculator. Here you will find premium calculator. Now, in order to calculate fair value, you need to enter three inputs: your stock name, your volatility rate, and your interest percentage. Here I'm gonna enter Nifty 16,000 PE. You can get volatility rate from your trading account. If you are ATS customer, then you can just log into your trading account. Here I'm already logged in. You can click here and you can go to option chain. You click on Greek and here you will get IVs. IV means implied volatility. We have entered 16,000 PE. So let's see what is the volatility rate of 16,000. 16,000 PE volatility rate is 22.51. So 22.51. If you're not ATS customer, then first thing you need to do is you have to open a demat account in ATS. In order to do that, you go on a I button and check out how to open your demat account video. Secondly, if you're not in an ATS customer, you can also get this implied volatility in NSE website. To do that, go to NSE India. You have to go inside this derivative, click on Nifty, click on option chain, select the strike price, or maybe you can just put it right here, and you can see here IV. This is implied volatility. 16,000 put option, implied volatility is 22.53. 22.53. Okay. Now, coming to interest rate. Interest rate, or you can better say risk-free interest rate. Now, NSE uses Black-Scholes model and it assumes the interest rate to be constant at 10%. But it is observed that in the market, it is not 10%. In reality, it keeps on changing time to time with the change in repo rate, the RBI repo rate, and interbank transfer rate. Now, so in our calculation, we're gonna take RBI 91 days T-bill interest rate, which is roughly around 4%. So we're gonna take it 4%, and I'm gonna hit calculate. So here you can see the calculator has calculated fair value, delta, gamma, theta, vega, rho of both call option and put option also. You can change interest rate here and recalculate it, or if you want, you can change entire option. Click on reset button, and now Nifty 16,200 CE. Just let me check what is 16,200 CE. Implied volatility is 16,000 CE. IV is 19.73. 19.73. 3, let's assume 4% and click on calculate. See, you can check fair value and current market price. Let's check whether current market price is exactly current market, is it correct or not. 16,200 is 33. So this is how option calculator works. Now all the important links will be given in the description box, and remember, if you have any query, you can always get in touch with us in our support WhatsApp number, that is 766-727-3344, or you can also write us at support@adityaTrading.com. Thank you.